Okay, so check this out. Let me move this over here. And that. I should have done this before I started the live, but that's okay. All right, a little bit more. Okay. So everyone's talking about rates. And I don't blame them. I mean, rates are a thing and they affect how we do business. So, I mean, the biggest thing is it's the Feds and their attempt to curb inflation, right? So every time anyone from the Federal Reserve, one of the 12 chairs, especially Jerome Powell, anytime they say anything, like the market freaks out, either good or bad. They want to make a move because they're always trying to be ahead of the market. So last week we had our consumer price index. It came in, let's see, a little bit higher than expected, meaning that inflation is still moving up. And when that happens, the Federal Reserve is like, oh shit, we have to move quicker, we have to do better. And I mean, they're not wrong, but they're not wrong, but unfortunately, in order to curb inflation, they have to hurt the economy. And every time the economy is hurt, like we all feel it to a certain degree. So consumer price index went up. Producers, what's it called? Purchasing managers index also went up. We had way more jobs than were expected. So all the numbers that the higher rates should be decreasing aren't happening yet. So that's where the Federal Reserve gets in there and they're like, what do we do? And all they can do is raise rates until we stop spending. And that sucks, but that's the game. So just kind of keeping an eye on all these items. And whenever the Fed meets, like it matters. Their next meet is late March, I think the 21st and 2nd. And, if they stay on this quarter point path, then all good. We'll start to see inflation kind of curve and rates to come down and all is right with the world. And I believe that when rates come down even a point, like there's going to be kind of a frenzy to go buy, even though like comparatively home mortgages are still going to be high compared to what they were a year and a half ago. So we'll see what happens, but I think that's happening sooner than later. So, what are we going to do? We'll see. The bright side of all of this is the end is near from a rates perspective. Like we are seeing things move in the right direction. I think the Q1 just had a little bit of a blip, and I don't know why. I mean, people are still spending, and I mean, as the economy slows, anytime there's a recession or a correction for inflation, like that allows incomes to catch up to all the increased spending, and that's good for everyone. I mean, it kind of sucks because 2 years ago, if you're making $50,000, well, that doesn't buy what it would buy 2 years ago. So now you need to make 60 or 70. And it sounds cool, but the fact is your 60 or 70 is only buying what your 50 bought. So outside of a feather in your cap, it's not that great, but more money, always better. So let's see what else we have on the rates. I think that's about it. I'm always up for these discussions. I love talking to everyone in different industries about rates and kind of why they do what they do, how they affect what we do, what can we do as a community, whether it's on the real estate side or otherwise, to help people, help people buy homes, help people stay in their homes, help people do whatever they need to do. That's at the end of the day, we're all in the same game. We want to help each other. So if there's some way I can help you or, something we can collaborate on, let me know. My website's in the description and I'm pretty easy to find online. So I'd love to help you. And if you're looking for a home or just kind of want to chop it up and see what's out there, give me a ring. Hope you have a great day.